Money 2020 is happening in Las Vegas, a key conference for the fintech world. And joining us now to discuss is Pat White, CEO of Crypto Tax Accounting and Compliance Manager, BitWave. All right. Great to see you, Pat. How is Las Vegas right now? Money 2020 has been a place where a lot of folks in the fintech world have gathered. In the early days, Bitcoin and Bitcoin enthusiasts were a very small part, almost laughed at part of the conference. But now, are you seeing growing crypto acceptance and, vendors?
Absolutely. Thank you so much for having me today. It is a real pleasure. Crypto is here, and it is a serious force. I mean, essentially, the themes for Money 2020 this year, as far as I can tell, have been identity, risk management, and payments, and then crypto. And crypto is funny because it cuts across all of those. It really does touch on every single one of those pieces, from risk to identity to just the payments piece. And so everyone is excited to talk about this. We've had people stop by the booth today for us to talk from grocery stores who are saying like, hey, what does it actually mean for a grocery? Like, what is our customer going to come in and pay with crypto to buy a bag of salad? Like, is that how this is going to work? So we're seeing broad excitement about this, broad interest in crypto in general, and I think this is just going to expand. I mean, it's going to be great.
And you also have an announcement that you're launching the industry's digital asset maturity model. Tell me a bit about that and walk us through an explainer what that is exactly.
We are. So BitWave is we are the world's, the leading tax and accounting solution for businesses that use crypto. We really clearly say, for businesses. We don't do taxes for individual retail users. We do, accounting and tax for businesses using crypto. And what happens is we keep seeing the same problems over and over and over again. It's one of those things that crypto it's kind of the unruly child of so many different things. I mean, it really is. Like, it's the unruly child of credit cards and bank accounts. It's the unruly child of Forex and securities like you would traditionally have. And all of these problems make it so hard if you are a CFO or if you are a controller at a company and someone comes to you and says, hey, we want to start a crypto project or initiative. We want to bring a little crypto on the balance sheet to, inflation's at 4% right now. Let's bring some Bitcoin onto the balance sheet to hedge inflation. You don't have a roadmap on what to do. So the digital asset maturity model is our attempt to put together a maturity model. If your viewers are familiar with the term, it's a pretty common term in enterprise software, which is it's sort of a step-by-step guide to go from like, oh my God, what is going on, through, hey, we're experts in the space. We are sophisticated. We go from like, hey, our CTO bought some Ethereum and we are screwed, all the way through like, hey, we are going into paper markets. We are borrowing money. We are paying payroll through streaming payroll contracts. And we have customers at all stages of that. We see customers who it's their first time touching crypto and they're terrified, all the way who have full trading desks as enterprises, businesses that have, financial analysts that work for them that are doing nothing but thinking about DeFi, figuring out how to fund their business, issuing bonds onto the blockchain. It's a really revolutionary time. And that's what's fun about being here at Money 2020 is I get to, get in the room with guys who, with bankers and different people like that and say, there's a real world where your entire business is upended in the next 5 years because suddenly all payments go peer-to-peer, or all the lending, credit cards go on the blockchain, or all these different issues that we're seeing change the nature drastically because of DeFi and crypto.
So how does this make the crypto tax accounting system for businesses easier exactly? Because it is very confusing. The rules are not always so clear. How do you get them over that threshold of being able to understand how to track for these volatile crypto assets?
It's such a great question. I mean, it's one of those things that you have to build easy to use software, and it has to be incredibly configurable. I mean, it's a funny way to sort of think about it, but our software has to be usable by people who maybe don't spend a lot of time with crypto. Like, you think about most bookkeepers or accountants, they didn't get into bookkeeping because they were crypto enthusiasts. They maybe just went to get a job at a company, and suddenly that company is in crypto. And you have to basically take someone and upskill them in two dimensions. And that's how we tend to think about it. As a bookkeeper might traditionally do a lot of, the accounting work at a business.
Do you think the current system is though clear? Do you think it's fair for
oh gosh, what a difficult question. I mean, clear, yes. There's, there are questions around the edges. Like, a great question that we always talk about is ETH to WETH. Is that a trade, or is that a taxable event or a non-taxable event? It would be amazing to get some regulatory clarity around that. But at the end of the day, like that, you're not talking about billions of dollars of issues. Like when I spend crypto, it is very clear that that is a disposition of that asset that picks up a taxable event that needs to get satisfied. So if I paid you, 1 Bitcoin for this interview, I would be paying taxes on that because Bitcoin's near its all-time high and I didn't buy any yesterday. So, there's those rules are incredibly clear. The accounting for it's relatively clear too. Like when I pay you that 1 Bitcoin, I need to get that into my accounting system. Like QuickBooks needs to show one Bitcoin of fair market value of USD worth of advertising expense or whatever it is. So the rules are not as cloudy as people try to make them in some ways.
Really? But by the same token, you can incur a huge loss, have to pay for that, or rather, you can make a gain and then have to account for that and pay the taxes of that and then incur a huge loss. So then not only are you paying your gains, but you're also incurring this huge loss. I mean, I don't know how that's difficult to reconcile for a business.
It certainly is. I mean, that's the thing is that you don't really want to get into digital assets as, if you are getting into digital assets to trade them, then you get into trade them and then you can mark to market and you can mark up on good months and down on bad months. And it sort of washes out. If you are getting in as a hedge, then you really want to be conscientious of that. Like you want to take your funds and hold it and really sit on it for a while. So I think that it's all use case driven. Like, why are you as a business getting into crypto? Like, is it part of your business? Then you have a vested interest in Ethereum. Then you want to hold the ETH and just use a little bit as you're doing your development work. But if you're a business and you want to hedge inflation, then you hold on to Bitcoin.